Now, Michael, you're out in the Phoenix market. Talk to us a little bit more about, just give us kind of a quick background on your experience in the mortgage industry, just so people have an understanding of your background and if you're a broker or banker, and then tell us a little bit more about how you've leveraged this marketing campaign.
Well, I work for a broker. I've been in the business since 2001, January of 2001. You know, the response that I've gotten off this has been phenomenal. Well over 50 calls. I have 12 loans in process now. I'm working on another, I'd say 12 to 15 that are in various stages. Some I've already sent out disclosures to. They just haven't emailed them back or faxed them back yet. And they've all been Fannie Mae loans, so that guarantee certainly stands. I haven't got anyone that has called me on a non-Fannie loan, that's for sure.
Yeah, what are some of the borrowers looking like in terms of loan amounts and credit scores? I mean, understanding that they're all Fannie Mae owned, but what's the quality of the incoming call?
Well, I had loan amounts of over $200,000 is what I requested. I didn't want to go down as low as the 150. And almost everyone has had 720 or better FICO scores, and I would say the vast majority are probably 770, 780 FICO scores. Here in Phoenix, they're, you know, anywhere from 180 to 300% LTV and CLTV. I got docs on my first deal on HARP yesterday. They signed, no problem, and I should have docs on probably another 3 or 4 over the next week.
What kind of rates are these people paying, Michael? Hey, Michael, what kind of rates are you seeing that these people are paying? They've had these mortgages for a few years, right, prior to 09, so are they coming in at 5.5, 6, 6.5? I mean, what are just kind of all over the board, I imagine. But
yeah, the majority are 5.5 or higher. I've had quite a few at 6.25, 6.5. One I think was even over 7.
Right.
I think I had 3 that were at 4.875. So really couldn't do too much for them, considering, you know, the lenders have their own adjustments. And so the rates for them are, you know, 4.25, 4.5. At 4.875, it didn't make a whole lot of sense for them. But I've had a lot of people that wanted to go to a 20-year fixed. And there were even a few that have gone to a 20-year fixed that were under the 125, and I was able to get 3.99% on a 20-year fix. So, you know, some of these people are going from their 30 down to a 25 or 20, and still
HARP really likes that too, right? The whole HARP program is all about lowering their terms. So if you're doing that, you might get a little bit better approval ratio on your DUs, right? When you're taking the term down.
As a matter of fact, yeah, I've had a couple that I either got a refer with caution or one of the levels on a 30-year. Once I switched it to a 25 or even a 20, I was able to get either a better level or even an approve eligible.
Well, that's a hot tip right there. I didn't even realize that, yeah, changing the term. I kind of forgot about that until we just started talking about it. Lowering the term could get you a DU approval instead of the EA1 or 2, right? That's interesting. And
yeah, talk a little bit more about the timeline on how long you think this HARP thing is going to last. I mean, are you seeing much competition in the market? Are your clients rate shopping you at all, or saying that somebody else is calling them, or what are you seeing out there?
I have only seen a couple that were rate shopping, and I don't have a problem with that because they typically go to their credit union or their bank. Their bank can't touch me. I'm giving people better rates than the banks.
Michael, you got a lot of people in Phoenix that are upside down. You had a few calls, you said, from people that had just hit like NOD or they had a bunch of mortgage lates and you couldn't help them. Were you able to find, like, you just kind of refer those off to your realtor partners to try to short sell the house? Or what do you do with those calls? You just kind of tell them, sorry, they don't qualify and they go away? Or what do you think?
Well, you know, I've had a couple that tried to work on loan modifications with their bank because the bank told them that they had to go late. And these are people that that can still pay for their mortgage and actually got their mortgages caught up. And so I had to tell some of them, I'm sorry, I can't do anything right now. You know, I'll talk to you in a year.
Right, right.
And then I've had a couple of others that are struggling to make ends meet, and I got to refer with caution, and I did give them a realtor's number so that they could, you know, talk to a real estate agent about selling their property. I have a couple that are still unsure of whether they want to sell the house. You know, it's the husband said, I'm going to sell before we go late, and the wife, I don't want to sell. So there's family squabbles over what they're going to do with the property at that point in time. But, you know, I let them know, hey, listen, you want to sell your home? You know, especially there's a couple that even had equity in the home. I said, you know, take that equity, put it down on a new home. I'll do your new home loan.
That's great.
Nice.
Well, thanks for sharing that with us, Michael. I'd like to bring in David. David's out in Massachusetts, just near the Rhode Island border. Is that David?
Yeah, I'm here, yep.
Great. Well, talk to us what it's like out there on the East Coast, because we just heard from Michael on the West Coast. Talk to us a little bit more about what's happening out in your market.
You know, it doesn't sound like everybody's upside, you know, as much. I'm running into average LTVs. Everybody, I mean, most of my clients are still upside down, but most of them are between 105 to 120, 125. I do have a couple that are in the pipeline in the 140 LTV range. But I did about, I did 2,000 letters, and I really concentrated in my local county. And the call response was pretty overwhelming. It's just myself. I really don't have a team or anybody helping me with the calls, but I probably fielded anywhere from 50 to 60 calls. I'm closing my first one on Friday, and I have about 8 in the pipeline, 8 solid ones. They're all approved eligible. The one thing I really liked about it was the fact that it was so local. A few of the clients that I got in my office were people I know.
That's great.
It's great. You know, my kid's t-ball coach walked in my office, a couple of people I went to high school with. So it really, you know, set myself apart from the competition, the fact that I was really local. I even had a client that was so local, he walked to my office with his docs. So it's the response ratio was great, and I'm having similar experiences as Michael. You said Michael, right?
Right.
Most of my clients are all, you know, FICOs of 7, 720, 750. I do have a couple that, you know, that went through with a 620. I'm a mortgage broker, so I'm able to wholesale with a lot of lenders, GMAC, for example. I have an EA3, and GMAC will take it because it's their own paper. And that one's a real they're all actually real profitable. I think out of the 8 loans, I'm probably looking to generate about $40,000 in revenue combined between just the 8 units. And I'm getting ready to, you know, send out another couple of thousand. I'm at the point now where everything is submitted. I got more than half of them approved. I got 2 of them clear to close. I was really impressed with the response ratio, and every single call that I checked, every single one was owned by Fannie Mae. There wasn't one that came back that was not owned by Fannie Mae. So when he tells you, he guarantees you that, you know, they're all scrubbed against the Fannie Mae list. He's 100% accurate, you know, with that information. I'm so glad.
Are you doing any stuff with, David, I'm sorry to interrupt you, but are you doing anything with Freddie Mac? I mean, is there anything, have you experienced that at all? Because I've heard there's been some frustrations, and it's been a lot harder to get Freddie deals done.
You know, I got my second Freddie Mac deal in the pipeline, and it is frustrating to do the Freddie Mac deals. They're not as friendly with giving you property inspection waivers. I got a Freddie Mac deal right now, 780 FICO, 50K reserves, 29 DTI, for some reason it won't accept the file, it will accept the file at a 20-year term. When I reduce the term, it'll accept it. And that's the only option the client has. And they're taking it, so it's a working loan that I have. But I have a couple of other ones that I just I just can't get through the system. I mean, from what I understand, though, Freddie Mac is updating their system over the next week or so. So if you have any Freddie Mac deals, rerun them in a week and a half or so. I'm told that there's going to be a lot more flexibility in the results.
Hey, I want to say something real quick, guys. Somebody told me the other day that they're running some Freddie, what is it, LP or DOs or whatever they call them, and if their credit card balances were over 50% utilized on their balance, that was messing up their approvals. So they were paying some credit cards down under 50% of their balance, and all of a sudden they were getting approvals. I didn't think credit card debt and balances ratios compared to limits would have anything to do with a Freddie Mac deal approved, but they said that it did. That was the only difference. And something else I heard from one of my clients the other day, I just want to throw out there to everybody, is that I guess Quicken Loans is doing wholesale, right? And Quicken Loans will write a loan term, not 30, 25, or 20, but odd numbers. Like you can write a loan term at 17 years, 23 years, 29 years. I mean, they're kind of an interesting, a lot of people don't want to start over on their 30-year amortized mortgage. So if they've got 24 years left, Quicken will write a 24-year mortgage, which I thought was kind of interesting. In fact, Dave, who told me that was the other client that bought the mailer in Rhode Island, Michelle. She was the one who told me that. I just remember.
Yeah, we work with Quicken. We do a ton of those with Quicken.
I mean, I'm not promoting Quicken. I don't know how they are at all on a wholesale basis, but I like the thought of rewriting the mortgages to an odd term. And gosh, this is just big news that you could lower the loan term and get a totally different approval out of DU and LP. I forgot about that. I need to share that with my other clients that are, they got 50 deals on their desk and trying to make sense of them all. And, to get a few more loans funded, that's a big deal. So I appreciate you sharing that and reminding me.
Thanks to David and thanks to Michael for sharing your experience with us. I mean, these individuals are not paid to come on this presentation. They've just been happy customers, and we just invited them to share their experience because we want to be able to take away the risks from the people that are considering this option to be able to take advantage of this HARP 2.0 marketing campaign that Jeff developed. Jeff, talk to him a little bit more. I've got a poll up here, and if anybody would like more information, please go ahead and cast your vote now, and then I'll go ahead and have Jeff. Why don't you just wrap up and tell everybody on the webinar what their next steps need to be if they want to move forward with marketing to some of these guaranteed HARP loan candidates.
Well, early bird gets the worm on this deal. I mean, I really appreciate Michael and David stepping up and buying this campaign from me like 2 months ago when I had no references. I had nothing to tell these guys except, hey, I got a hot list and a great letter, and I know it's going to work. So they both stepped up and paid me, without having anybody to call. So I really appreciate that. The guys that go first just get a lot of the, the best response and get all the low-hanging fruit. So, I guess in finishing, Dave, I would just say to have them, call us. We can run counts, tell them exactly how many Fannie Mae-owned mortgages are in every zip code in a radius around them, by county, by state. So we'll show them the counts. We'll show them 2 or 3 letters if they like this letter, if it's worked well, or if they want to do something different. They want to put their picture on it, we can do all that on the letters. And let's get something printed and mailed and, get you 25 to 50 phone calls and another, 10 deals for next month, That's my suggestion. So.
If anybody has any further questions, you can give us a call at 888-212-4343, or you can just visit us on the web at overflowworks.com. Thanks, Jeff. Thanks, Michael. And thanks, David, for participating today. And we wish you all the very best of success. Take care, everybody.
Thanks. Take care. Have a good day, guys.
Thanks.